With a fast-changing mortgage rate environment, it's getting harder for borrowers to get mortgage loans these days, and government programs like FHA Streamlines are going away. So more and more lenders are offering their own non-QM or portfolio products to meet this borrower demand. I know, it sounds like subprime, but it's not. These are high-performing, really safe products that the borrowers have an average FICO score of north of 70, their LTVs are south of 80, and their DTIs are in the 30 range. That doesn't sound like subprime at all. Well, while Fannie and Freddie offer automated underwriting tools like Desktop Underwriter and LPA, or it's called Loan Prospect Advisor, I believe, DU or LP as they're more commonly known, non-QM loans or non-agency loans are really left to manual underwriting. Hello, my name is Raj Parekh. It's my colleague Keegan Rodriguez. We're here from LoanScorecard. We're here to show you Portfolio Underwriter, our automated underwriting system for portfolio lenders that helps them streamline their underwriting, reduce errors and increase consistency, and keep lenders in fair lending guidelines, compliant. Running Portfolio Underwriter for your non-agency loans is just as easy as running DU or LP. You can access it from loan origination softwares. By a click of a button, it takes the loan data with the credit report data and analyzes under your underwriting guidelines. You can also access it or embed it into your backend systems through our API, or you could go to LoanScorecard.com, which is what Keegan's going to do today, to run an AUS findings. Now, we take two data payloads to really analyze the data. We take the loan file data, which is a 1003, usually comes in a Fannie 3.2 file, and we upload it into the system along with Keegan has already run credit on this particular file, so the credit report is there. We're going to analyze these two pieces of data against the underwriting guidelines for this loan. He's going to choose a non-prime program for this particular lender, and he's going to hit Run Custom. It's going to take us to the findings report. In a few seconds, we should get a PDF findings report that gives you an underwriting analysis of this non-agency program. So you can take any loan that you're looking to either originate, buy, or sell, and run your custom AUS engine right on it. So just like DU or LP. At the top of the report, you'll see it's customized for one of our clients, Deep Haven Mortgage. They're a big non-QM lender. At the top right, you'll see the kind of loan program there is. It's a non-prime, 5-1 ARM. It's passed. Some information about the borrower, about the credit score, the loan terms that are requested with the LTV, the type of loan. There's a qualifying rate, which is calculated. Takes the greater of the calculation of the index or the margin. Gives you monthly payment information, gives you housing ratio information, DTI information. Just a good little fun summary, where the funds are coming from, what the borrower needs to bring to the table. Good fun summary there for you to look at, for any regulator to look at to get a quick understanding of this particular loan. There's also some information about, let me cover this part of it. I'm just going to skip over a couple of things. Okay, so in this case, this is a full doc loan. But we're going to go into the second part of the system, which is actually, there's some income information there, but the second page is where the meat of the analysis is. The left-hand column over here are the underwriting guidelines of this particular loan program for the lender. The middle column is the information that we get from the loan file, the borrower information, and the credit information. And the third column is a pass. Let's just look at a couple quick things. Max debt ratio is 55 under this loan program. We fall under at 47.96. The LTVs, we're fine there. We're a pass there. You'll see how the minimum disposable income is, and she has plenty of income. Disposable income, 8,000. Let's go down to 16 and look at the credit analysis. You'll see this is where credit analysis starts. You'll see the minimum credit score is 500. We take it right out of the credit report. Pennies is 670. It also takes the credit score of the highest income borrower. So we can really get detailed in the analysis that we do in the automated underwriting engine. You'll see that there's mortgage lates over here that allows 30-day mortgage lates, but not 60, 90, and 120. You'll see that at 24. It doesn't even allow it at 120. Of course, Petty meets all of those. A couple of other mortgage loan types there, minimum housing events, there are none for the borrower. And then the last part is program messages. The next section shows the number of applicable messages to the credit officer that they may want to convey to either the originator or the underwriter. These can be, it can document the loan, they could provide exceptions to the loan, or explain how certain things are calculations on the loan. So that's our underwriting platform. We've also created a new product, a very popular loan in the non-QM space is a bank statement loan. It services really self-employed borrowers that have been underserved in the market. We've created an income calculation that takes bank statement data that we get directly from the financial institution with the borrower's permission. We analyze 12 months or 24 months of that data, and we give a true income calculation by weeding out certain factors and putting in and pulling in data factors. You can see it right here, what we pulled in, what we've taken out, allowable deposits and non-allowable deposits to give you a true income calculation. So that's our new product. It's called the Income Calculator. So the Hunter report will tell you very applicable, incomplete picture of the elements that you considered in your underwriting decision. So you've got to be prepared to tell the story behind the decision you made. With AUS findings like this on every file, you'll be ready to demonstrate the consistency criteria that you apply to every loan. If you ever find yourself in a regulatory audit, this is a good thing to have attached to your loan. It takes the guesswork out of reconstituting the reasons behind your underwriter's approval or denial years after the fact. It's all right there. And it keeps you streamlined, it reduces errors, keeps it consistent, and keeps you right within the regulatory guidelines for fair lending. Thank you very much. Come see us at our booth. My name is Raj Parekh.